Hey all, welcome to ShareTreck. This is Raj here. I'm going to look at the market as I always have to do as an investor. I had stopped it briefly because I stopped doing the technical analysis on our channel. So this is an add-on on top of all our regular programming. So I'm going to do this. It's going to focus not only on genomics, but also all the other stocks that I have in my portfolio. So I'm going to try and put timestamps so that you can skip the parts that you don't want and go directly to the parts that you want to see. With that said, let's get started. Welcome back, friends. First, let's look at the Nasdaq Futures, which are looking strongly positive with a gain of 0.34%, and that's really looking very healthy. However, the RSI is overbought and the MACD is super bullish. So anything could happen out there. And then let us look at QQQ. QQQ is also looking very healthy, but the RSI is overextended and the MACD is just crossing over to the bullish side. So we are continuing to be in this huge area that had marked out for sell. It seems like it doesn't matter anymore after struggling for weeks. Right now, I think we are on track to find out what is going to happen with our target for the cup and handle. So I can actually start talking about it right now. Give me 1 second while I improve this and show you the target. This is the target for QQQ, 493.32, in case we break through from here. So this is my analysis. It may or may not come true because technicals are not everything. There are a whole lot of stuff that hang on our head this week. One is Fed Chief Powell, who's going to speak later today at around 2 o'clock. And if he says anything that changes the market perceptions for the worse about 25 basis point rate cuts that they had priced in, then that could be a bit of a problem. The second issue is that we have the quadruple witching that is happening right now on the 15th of December. And quadruple witching basically involves the simultaneous expiration of 4 financial derivative contracts, which are stock index futures, single stock options, stock index options, and single stock futures. So all of these are going to expire simultaneously. And I want to give you an idea about what some of the experts are thinking. Why are US stocks sluggish? Some blame a looming 5 trillion options expiration, which is going to happen right now on the 15th of December. It says here, dealers squaring their books ahead of an options expiration that is said to be the largest on record for S&P 500 linked derivatives, may be helping to tamp down swings in the US stock markets. That's why the VIX is so low. Some $5 trillion in US stock options are set to expire on Friday, 80% in S&P 500 linked contracts, the largest such expiration at least in 20 years, according to ASYM 500 MRA Institutional, a unit of derivative strategy and execution firm Marco Risk Advisors. While such events can exacerbate volatility, strategists say market participants' behavior ahead of the upcoming expiration has been muting stock gyration, and maybe one reason equities have traded in a tight range over the last week. So what are they talking about, the tight range out here? It is this tight range that they are talking about. This was a tight range in which it was dealing. Now, if we were to go to VIX, you can see the volatility is very low. People are already stuck in their positions. And if we were to look at the put-call ratio, we'll find that it's poised at 1, which is neutral. So everything is muted. Nobody wants to take a breath. That's how it looks like. And yeah, so that's something that I wanted to mention. Now let's go back to QQQ. So if you look at QQQ here, RSI is overextended and MACD is just crossing over to the bullish side. And we are almost ready to break through from here. And if we did break through, I suspect that we have a shot at 493.59, except for the quadruple witching and what the Fed has to say about the interest rates, because we have a beautiful cup and handle pattern in place, and which has been now followed by this bull flag. So if you disregard the cup and handle, and if you just look at the bull flag, so I would say that, let me take this line from here and assume that this is the flagpole, and I'll just move it out here so that we have it straight. And then let me clone this. Where is the clone option? And I'm going to take it here, the exit point where it was, and I pull this down. Then this gives me a target of 450.66, which is more doable as compared to the target from the cup and handle pattern. So ideally in the cup and handle, the takeoff should have happened right here. It did not happen, so I'm considering this to be a bull flag, and the bull flag exited the flag from here. So I've extrapolated the price target for the bull flag, so it could come to 450.66, assuming that this is the pole of the flag. However, if we were to think that instead of that being the pole of the flag, this happens to be the pole of the flag, just give me 1 second. If this is the pole of the flag and this comes here, and then if I clone this, then you can see that we have a target of 402.99, which is very close to where the pricing is right now. So I think this is the most realistic scenario given the quadruple witching risk and given the risk that Fed chief may say something that could upset the apple cart. Now let's look at VIX. VIX has been as low as possible. One way of expressing my concerns out here is that in the past, I mean, going all the way back to 2018, right? There have been very few exceptions where we have gone below this level of volatility and stayed below that. And at this point of time, my conclusion is that if we touch this, we are going to go up. And when the VIX goes up, you're going to see stock prices coming down. The volatility will inch up. So if those 5 trillion of option expiry happens, then the so-called peace and tranquil that we are seeing right now is going to change, and I wouldn't be surprised if the VIX goes up. So at this point of time, I'm going to stay away from the market. I'm going to wait and watch. Now let's look at the companies that have reached that 20-day average. This is the S&P 500. These are above that 20-day average. So the companies are somewhere around 82% of the companies are already in the 20-day average, and we have around 85% of companies which are above that 50-day average in the S&P 500. So everything is ripe for a drop, and it could happen anytime, in my opinion. Of course, this is not financial advice, but you do your own due diligence. Now let us look at the Magnificent 7. I would look at FNGU first because that's what I generally use for trading because it gives amplified returns. I won't be buying FNGU anytime soon. It's at a very critical resistance of 212.90, and RSI is almost overbought. If you look at the constituents, there is a Netflix in there, which has a bearish MACD, but above average momentum. Netflix will definitely gain. It has got space to gain further. And then you have Apple, which is also very close to having its RSI extended. And MACD is slightly bearish out here. Apple is, I think, overvalued, but it has got a lot of investors coming back in. One of my theories right now, if you guys recollect, I told you the Friday before last, I sold most of my Magnificent 7 holdings, Apple, Microsoft, Amazon, and I kept half of the Google with me, and I sold the rest. And I also sold FNGU, and I took a good profit, handsome profit from FNGU. I think I sold it at $204 or $205, something like that. So I'm sitting on the sidelines with all that cash, and I'm not entering in right now. I think that these stocks are now attracting people who are looking at high price and the growth in these shares, and they think they lost an opportunity and they think it's going to go up further. So those kind of people are coming in. In my opinion, I would consider that it will be a risky move at this point of time to get into Magnificent 7 because there's a bit of rotation that is happening. And the rotation is not happening on a complete basis. I think whenever the rotation takes place and the Magnificent 7 goes down, I think new investors are coming into Magnificent 7 and pushing it back up again. So I think once the quadruple witching is over and the volatility picks up, we could see a sudden drop, and that will be the opportunity to buy. That's my thesis at this point of time. So with that, let us go on and have a look at genomics. In genomics, I am looking at IMTX, which has gained around 3% pre-market. There are no trades out here. BioNano has a pre-market trade, and it's gained 0.69%. Gilead has gained 0.10% pre-market. Thermo Fisher has gained 0.23 pre-market. Vertex has gained 4.07 pre-market. So if Vertex has gained that much, let us look at what's happening to Crispr. Crispr is down minus 0.41%. So the market is not forgiving Crispr yet. And let us have a closer look at Crispr. Where is Crispr right now? So pre-market is 57.58. So this is the lower level out here. So we are out here, and our next support happens to be 56.36. Our momentum is weak, and MACD is also bearish. I'm expecting Crispr to turn around today. Don't ask me why. The only reason I have is that it has had 1, 2, 3, 4, 5 consecutive red candles, despite the fact that it's got a therapy approved, it's got 200 million payout, it's got $2 billion, almost $2 billion of cash in its balance sheet. It's ending the year with a phenomenal balance sheet, and it has got really good therapies for cancer, 2 CAR-T therapies which are in really good shape. It is fully owned. And type 1 diabetes drug is also making good progress. Everything is going well for CRISPR Therapeutics. And I think that after 1, 2, 3, 4, 5 red candles, there's got to be a green candle today. So that's what I'm hoping. We may open low, but we may push higher. We may still probably end the day lower than where we ended yesterday. That's a possibility based on what happens with the quadruple witching. But overall, I think CRISPR is not valued fairly out here. That's my opinion. You guys can give me your opinion in the comments. I always look forward to your feedback. Now, next going on to Illumina. Illumina is starting to look good. Illumina has already made a confidential Form 10 submission to the Securities Exchange Commission, laying out how they plan to divest Grail, even though they are appealing with the EU. So that is seeing a bit of traction out here. There are 2 consecutive days of green, and it ended flat. 2 days, they are still waiting to see what is happening with the Grail disposition. So at this point of time, if there is any message or something that goes to the contrary of disposing Grail, I expect the stock price to come down and test the support out here. Oh, this is not the support. There is a support out here. This will be the support. It will test the support at 101.75 approximately, and then it can bounce back. That's my opinion. And ARC-G is struggling above this support of 28.02. Its fortunes depend on what happens to the rest of the genomic stocks. Intelia. Oh, let's go to ARC-G and Illumina again. Illumina has got... market is already open at this point of time. Illumina has a gain of 1.22%. That's absolutely fantastic for Illumina. ARC-G has gone up 0.25%. Intelia is down 0.82%. Editas is up 5.39%. PACB is down 0.48%, but soon picking up. And Allogen is up 0.42%. Caribou is up 0.53%. It's managing to stay above this line of support. And DNA is up almost 0.75%. Beam Therapeutics is down 0.04%, but it's improving. Verve is up 0.17%. CRISPR Therapeutics is down 0.29%. So it is improving. CRISPR is improving its valuation. So hopefully today we test the resistance here at 59.23 before close. I'm expecting that because Vertex has already shown a positive movement. Of course, Vertex is a different beast. It has got so many things going. But I think CRISPR is also pretty good. mRNA is still down 2.83%. Invitae is down 2.37%. And let's go to Bluebird, which is up 2.87%. And it's quoting at $2.86. So there's a little bit of strength in Bluebird right now. But I don't know why people are still flocking into Bluebird. It's going to probably dilute the equity further in order to sustain itself and to market their latest therapies. So that's what I got for you here, my friends. And apart from this, I want to talk about a few other things. This is an article from Morningstar. It says, here is what hit the Magnificent Seven stocks and why the selling may continue. And this is dated December 12, 2023. So in this article, which is coming from Morningstar, they are saying that Monday marked the first time since 2012 that the Nasdaq 100 managed a positive close with all Magnificent Seven names: Apple, Amazon, Tesla, Nvidia, Microsoft, Meta, and Alphabet closing in the red. It could be nothing, but our call of the day from the macro tourist Kevin Muir has an explanation, as he warns selling of these heavyweights may just be getting started. He explains the Nasdaq over the weekend announced final changes for its Nasdaq 100 rebalance or reconstitution that will kick in with Friday's option expiration. The committee had recently flagged the Magnificent Seven group's heavy concentration and its methods of dealing with that, and rebalancing by index committees is done quarterly to limit the influence of the biggest companies. But the Nasdaq did a special rebalancing this summer. Those companies' weights are capped at 20% of the index if they exceeded 24%, with the combined weight of these exceeding 4.5%, capped at 40% if it exceeds 48%. So this is all gobbledygook at this point of time. But basically what he is saying is that Muir says Barclays laid out monster stock selling needed to rebalancing Apple. So you have to sell 4.7 billion. The funds will have to sell 4.7 billion worth of Apple, 4.1 billion worth of Microsoft, 2.26 billion worth of Amazon, and 1.22 billion worth of Alphabet, that is Google shares, and 1.29 billion worth of Alphabet C shares, and 1.76 billion of Nvidia, and 135 million of Meta, and they will have to buy 2.9 billion worth of Tesla. But the banknotes, $5.67 billion in buying was expected. So there's a whole lot of selling, and that money, some of that money has to go into Tesla. So Tesla stocks can pick up at this point of time. And I think the Magnificent Seven will go down. That's what they are saying. And I also have the earlier press release on November 3rd, when they said the Nasdaq 100 underwent a special rebalance in July. But what does that mean for advisors and investors looking to capture the top performing tech companies? So here you can see breaking up concentration risk in tech. Going into the rebalance, the top 7 companies, Microsoft, Apple, Nvidia, Amazon, Meta, Tesla, and Alphabet, collectively comprised around 55% of the index. Post-rebalance, the top 7 minus Alphabet and adding in Broadcom make up just 40% of the index. So there is the latest rebalancing which is happening after the options expiration. And if you look at QQQ in light of that, and for that matter, if you look at FNGU in light of that, I think we are destined to come back down. And before that, we still have until Friday. So everything is tranquil. So there may be a lot of investors who may push it all the way up to 227, which was the last high. And then it may come down, which would mean that all of this Magnificent Seven have an opportunity to gain a little more before falling. So that's how I read this. For my part, I'm going to stay away in the sidelines. And I'm just going to watch what's happening. And once the option expiry has taken place, once Fed Powell has already spoken, I'm going to react rather than try to see where the market is going. Because I think at this point of time, I need to be careful. I'm a retired person, and I cannot afford to lose my capital. And I can't make a winning call every time, I know that. But I'm just sharing my thoughts with you, that these are the thoughts in my mind because of which I'm going to sit in the sidelines. I'm half invested, half in cash. So the half that I'm invested can definitely give me the gains if the market was to go the other way around and really bounce up. So I don't want to be too greedy. And speaking of greed, here's the fear and greed index from CNN Business, and it shows that the market is still quite greedy, and you have to be fearful when everybody is greedy, and you have to be greedy when everybody is fearful. So I'm being fearful right now, keeping with that axiom. Well, that's all, my friends, and I'm looking forward to your feedback. Put your comments and let me know what you're thinking about the market. Some of your comments might end up helping me make a good investment decision. And remember, we are a retail investors channel. None of us is better than the other. We just got to pool our intelligence and pool our thoughts together to make sense of the market and see if we can make some profits. With that, I would like to end this video here. Thanks and have a great day. Bye for now.